So if you guys want to learn how to trade options, purchase my ebook located at wordly41.gumroad.com. Link will be in the description. And basically, how did I make $72 trading a couple of Nike call options? So looking at Nike at 1430. So 1430. Let's see. Okay, so basically, as soon as I saw that Nike landed on the 50-day moving average, I took an opportunity. I bought some call options there as soon as it landed on the 50-day moving average, and then at 1442, so a couple minutes later, right? Basically at 1442, which is this very same candle. So basically, this very same candle, I sold out the position a couple minutes later, and when I sold out at 1542, I made an easy gain of $72 trading a couple of Nike call options. So basically, this trade was a day trade, and basically this trade was pretty easy. And I guess you could say I want to do like more smaller trades because I want to show you guys this, the strategy that I've been talking about for a while, and it's basically trying to use the moving averages as support or resistance levels, or try to use the moving averages as entry points, whether you're playing calls or put options. And so basically what made me play calls on Nike specifically, so basically I analyzed the chart and I was like, okay, Nike on the 10, 10:30, 11, and the 11:30 candle have used the 50-day moving average as support, right? And so in my mind, I was like, okay, let's see if Nike could possibly land on the 20 or 9-day moving average, right? That opportunity came, but I missed out on it. So I was like, okay, it's not the end of the world. Let's see if Nike can break those two moving averages, the 9 and 20. It broke below it and landed on the 50-day moving average, right? But I wasn't yet confident in entering the trade there, so I just waited for the next candle to use the 50-day moving average as support. And basically at the 1430 candle, right, I used the 50-day moving average as support. So that's when I was like, okay, I'll just buy a couple of call options there as soon as it lands on the 50-day moving average. I bought a couple of Nike call options there, waited for to see if Nike could bounce off the 50-day moving average. That did happen. Within that same candle, I sold out the position, and when I sold out the position, I made a gain of $72 trading Nike call options. So it's just like you're trying your best to I guess you could say try your best to analyze the chart in a way. That way you can kind of know whether to play either calls or puts. For this example, right, like I just showed you guys, I played calls. Now let's say I bought, I don't know, let's say here on the 14 candle I bought Nike call options as soon as it landed on the 20-day moving average, right? Basically I would buy Nike call options as soon as it lands on the 20-day moving average, right? Then let's say all of a sudden Nike just decides to break the 20-day moving average. My next entry point would be on the 9-day moving average. As soon as it approaches the 9-day moving average, that's where I'm getting in. And then let's say all of a sudden, Nike decides to shatter the 9-day moving average. My next entry point would be the 50-day moving average. And basically from there, right, I would just go from observing, what is Nike doing? Does it want to use the 50-day moving average, or will it break below the 50-day moving average? If it decides to break below the 50-day moving average, my next opportunity to capture on Nike would be as soon as it approaches the 180 or 200-day moving average, right? And from there, right, my game plan would be either to patiently wait and see if I can see a bounce from Nike. I would say, I don't know, dude. I would say probably like 60 or 70% of the time, this strategy basically it tends to use the moving averages as support or resistance most of the time. I wouldn't say it's like 100% foolproof. That's why you kind of have to have like a number set in mind. So basically, let's say, your risk tolerance level is like pretty, I don't know, like let's say you have a percentage target that you want to aim for, right? Let's say you want to aim for a 5 or 10% win rate, right? Basically, that would be your percentage target that you would want to reach for. And then let's say your, the least that you would want to lose is 10%. So let's say this position where it says 6.84%, as soon as you see that your position is down 10%, that's where you want to know that, okay, that's my exit point. I don't feel like this trade is going my way. I'll just exit out the position, move on to the next trade, double it, the percentage target. So instead of aiming for a 10% target win rate, I'll just try to aim for a 20% target now. So that way you can recoup that previous loss from that previous trade that you did. So I basically try to use the, personally for me, when I see that a trade is down at least 10%, I'll definitely try to, move on to the next trade, because I feel like that trade won't go my way exactly most of the time. So, but let's say I'm feeling really confident in the trade. Usually I'll try to wait for the position to be down 10%, right? So where it says 6.84%, right? I'll wait for the position to be down 10%. And then once I see that the position is down 10%, I'll buy another couple of, call options, specifically for Nike, right? I'll buy another couple of Nike call options as soon as the position is down 10%. That way my average can be reduced to being down now instead 6 or 5% now. So instead of being down all the way from 10%, I'm now down 5 or 6% now. So basically try to, once you're in a position, try not to go heavy in it. Try to go like a little bit, slightly, load up in the beginning, like very lightly. And then once you feel like, okay, now that the position is probably in a bad spot, now's your time to, go in with the, with more money. That way you can dollar cost average your position. And that way when that position or stock, right, all of a sudden decides to go up, specifically if you're, like if I'm playing Nike call options and Nike decides to go up all of a sudden, I have, basically my position will be in the green a lot more faster if I'm dollar cost averaging. So basically try to dollar cost average, try to use the moving averages as support or resistance levels or as entry points, whether you're playing calls or puts. And that's pretty much it. As always, this is not financial advice. As always, take care and bye.